Good day, my name is Christelle from Klerk, Independent Technical Analyst. The first one on our list today is Shoprite. Now there was a head and shoulder formation on Shoprite that was completely wiped off the table now when that top of the right shoulder started to change into a support. On a line graph, that right shoulder is waiting at 302 Rand 74, and yesterday's Shoprite closed at 305 Rand 50. In other words, this warning is now off the table. What is very positive is the fact, and I'm going to draw a horizontal line here, is that this support level here, waiting at 283 Rand 73, was tested and remained a support. Now my big test will be the head of that previously head and shoulder formation, which is waiting at 310 Rand and 7 cents. If the buying power is strong enough and they can break through that resistance levels, we can assume higher levels for Shoprite. Technically, the first sign of weakness on Shoprite will be again below 283 Rand 73. Very important, have a look that the share price found support above my 40-week moving average, waiting at 275 Rand and 9 cents. Ladies and gentlemen, that is seen as very positive. That tells me that the long-term sentiment towards Shoprite is still positive. Look at my stochastic indicator. It was in oversold territory and it confirmed a positive divergence. That K percentage line broke upwards through the orange line, and that is seen as very positive. That tells me as well that the probability for more upside is there, and we can probably see that the Shoprite price can reach for higher levels. Strong support that needs to remain is, as I've said, waiting at 283 Rand 73. If my 40-week moving average should at some stage change into a resistance again, that will act as my second negative confirmation, and that will change the long-term sentiment towards Shoprite to negative. If I add my 20-week moving average, I can see that my golden cross formation is still in place. In other words, the bullish trend towards Shoprite is still in place. And that is very, very positive. My 20-week moving average, represented by the green line, waiting at 295 Rand 18, is also a very strong support that has to remain in place in order to sustain the momentum to the top. If I change this graph to a candle graph, I can see very strong bullish engulfing candle for the week thus far, up 7.6%, and this week is the week of the 28th of October. I've redone this Shoprite and Truworths video because of the sound. So above that 295 Rand 18, that 20-week moving average, we can assume more upside. Second one on our list was Truworths. Ticker on our exchange TRU. And if I change this back to a line graph, again, there was a possible inverse cup and handle formation, but there was a small pullback and immediately the buyers protected the share price. And now the big test is, can that strong resistance waiting in the week of the 23rd of September at 111 Rand 25, can that level change into a support? If it can, we can assume again that the momentum to the top will continue on Truworths. My first sign of weakness will be below the neckline, and that is waiting at 102 Rand 51. Below that level, first sign of weakness will be confirmed. Have a look as well, ladies and gentlemen. My 20-week moving average came close to the 40-week, that red line. It did not even touch it, but it kept it a support above one another, can be seen as confirmation of a bullish trend. Very positive. Take note, my share price is overbought at the moment. It is sitting on an 86, but both lines within my stochastic is still pointing upwards, implying that the momentum to the top is clearly in place. So keep an eye on those strong support levels, because below that, the first sign of weakness, and in the 20-week moving average case, second sign of weakness will be below that 98 Rand 34. Yes, the share is extremely overbought. My stochastic is sitting on an 84 and I've got a negative divergence. That blue line, K percentage line, has broken downwards through the orange line, which means the probability for a pullback has increased, right? However, look at my line graph. The share is making beautiful, and I'm going to draw that for you, has been making beautiful higher lows. Very positive technical goodbye kiss here where the share pulled back, tested the 40-week moving average and bounced from it for higher levels. That is seen as very positive, ladies and gentlemen. That is also seen as confirmation that there is enough buying power to change and keep the medium to long-term sentiment towards the share to positive. However, I also want to highlight a very important positive formation here, and that's what we refer to as the golden cross formation. This green line represents the 20-week moving average. My red line represents the 40-week moving average. When that 20-week moving average breaks upwards through that red 40-week moving average, it's seen as a golden cross formation, and it is confirmation that the bullish trend towards the share has been confirmed. Very positive for any long-term investor, and that has been the case on Balwin. What makes it very difficult is where do I buy? Because the stochastic is extremely overbought with a negative divergence. So technically, we should wait for a pullback first, wait for support to be established, and then accumulate the share. However, if I change this to a candle graph, we can already see in this week's candle, and remember this candle is not finished yet. This candle will only be finished by Friday's close. But in the making here, this work in progress candle shows me a spinning candle, long-legged doji, some might refer to it. Both tails on the upper and lower shadow is almost the same in length with a small real body. That tells me the buyers and the sellers were not sure what to do. They were not sure whether they needed to take the share higher or lower. So wait for a pullback maybe then, and then once that 40 and 20-week moving average remains as support, my stochastic is a little bit lower with a positive divergence, this might be an opportunity to look at Balwin again. Beautiful golden cross formation here, and we can see here in the past the death cross and golden cross formation was beautiful, bullish. I'm going to draw them for you. Beautiful bullish and bearish confirmations. Bullish there, but immediately confirmed the bearish trend there on Balwin property. So sometimes you have to play with the moving averages to see whether a 20 and a 10 might work better, but a 20 and a 40 is working beautifully on Balwin. We had a question as well to say, when do we use what type of graph? When you are a CFD or a single stock futures trader, you probably will use a daily graph and then even intervals like in 90, 120, and even maybe a 60-minute graph. If you are a medium term to a longer term investor, in other words, you buy a share for a dividend or a little bit of a longer view, then you look at weekly graphs. In other words, you might have to wait for Friday's close in order to see how that candle is finalized and how it's finished. And then over the weekend, the theory, the textbooks tells us, you look at the graphs, you look at the moving average, and you make the decision on the Monday. However, sometimes we preempt the shares and we look at Friday before the close and we make the decision because we want to maybe have the stock for the long weekend or whatever the case might be. But CFD traders use daily graphs and weekly graphs for share investors who maybe have a medium to a longer term view of a share. And the interval, in other words, the time frame of the graph is extremely important because a daily graph might look very different than a weekly graph and even the patterns on it as well. SBK, Standard Bank. Also a share that we talked about here on Talking Technical, and now what happened? The share is losing stem. There is a very small head and shoulder formation. I'm going to draw that for you. That is leaning there on Standard Bank. I'm going to give that a small left shoulder and a left shoulder head and a right shoulder. Now we are trading below that neckline at the moment, and that is waiting at 240 Rand to 29. That means the confirmation of the head and shoulder is on the cards. only when the share starts to trade above the left shoulder, and I'm using the left shoulder because that is the highest one of the two, left or right shoulder, that is waiting on a line graph at 239.99. Only when the share price starts to trade above that will I be able to say, listen, the confirmation is of the cards, and the head and shoulders of the cards, and the formation to the top will continue. So I just want to show, yeah, that line graph, that head and shoulder, that left shoulder is very close to that neckline. 239.99 is that left shoulder, right? And that neckline is almost at that place. So in that case, I would maybe change to a candle graph and see if I can have better. Great. Let's change that line graph there, that neckline there, excuse me, to maybe confirm. But then I don't necessarily have, I still have a head and shoulder formation, but a very distorted head and shoulder, right? With a very big left shoulder, a head, and a right shoulder. And I can call that a right shoulder, although it's very small. Why? Because it touches the neckline. It's confirmation that I've got a proper body, right? A left shoulder, a head, and a right shoulder. So technically then for me, the neckline, a better neckline will be below 235.44. That's confirmation for my neckline. And then on a candle graph, it will be above the high of that week of the 26th of August. That's above 243.50. Above that level, my small head and shoulder will be off the table. Have a look at our stochastic. We already have confirmed a negative divergence, right? It means the probability for downside is there. But look at that blue line within my stochastic. It's starting to turn around and it looks like it wants to break upwards. So some investors might say, listen, I am going to try to hold on to this stock a little bit longer to see whether that blue line doesn't break upwards again, because we've seen in the past here, Standard Bank maybe took a consolidation base, bounced again, pulled back a little bit, and bounced again. So this might be a little bit early for Standard Bank to take profit. And if I look at my 40-week moving average, the long-term sentiment is still very, very strong and positive. And if I add my 20-week moving average, in fact, in the week of the 19th of August, again, a golden cross formation where the bullish trend towards Standard Bank has been confirmed. So technically, for me, my first sign of weakness on Standard Bank will only be below the 20-week moving average, and that is waiting at 226.63 Rand. Only below that level will I say, hey, confirmation for me of weakness is there. I might want to consider taking profit. But you know our story about taking the easy money off the table. You can't eat a whole cake every day. You'll become very sick and probably diabetic. But if you have a slice every now and then, you will gain weight. And that's what you want for your account. You want your account to systematically and consistently bank profits. And you do that by not being greedy and taking the easy money. The share is overbought. If you bought at these levels where confirmation was there of a cup and handle formation, you're good in the profit now, and there's nothing wrong with taking it. If you've got questions or any requests for next week's show, please either send it to us via Twitter or email at admin@fransdeklerk.com. Have a fantastic week. Take care.